What's up, everybody? Welcome back to the show. Today we have on a very special guest here to talk to us all things Bitcoin multi-sig self-custody. Of course, something we are very involved with here at Theya. That is our product. Mr. Peter Dunworth, the Bitcoin advisor. Peter, welcome to the show.
Pleasure to be with you, Joe. It's followed your progress over the years, and it's a pleasure to be speaking with you.
Happy we can make it work with the time zone difference down there in Australia. Morning for you, afternoon for me. Very happy to have you on regardless. Happy that we were able to schedule around that. First thing I want to kick off with, today's been crazy price action wise. I know you've been asleep for a great deal of it. But obviously in the last, what, 3, 4 days, we've rocketed $10,000 higher. But one thing that happened today is that Coinbase was down. And I know Coinbase is they're managing the Bitcoin on behalf of 9 out of the 10 spot Bitcoin ETFs here in the United States, the odd man out being Fidelity that has their own proprietary solution. That's not good. For retail customers, their balances were $0. Some were reporting that they weren't able to sell any Bitcoin. Not to mention, all of the ETF issuers use Coinbase. It kind of shows how fragile having a central point of failure is. Talk to us about these ETFs products versus owning Bitcoin outright. Like, who are these ETFs for? If people have a lot of money and they're on the fence, what should they be doing with that if they want to invest in?
So that's a really good question, and I think the problems associated with Coinbase for anyone who's been in Bitcoin more than a couple of years, or anyone who's studied the history of Bitcoin, um, today's efforts from Coinbase almost bring back a post-traumatic stress disorder for anyone who's seen what happened with FTX or Luna or any of the other exchanges that have crashed and burned in previous cycles. And this is where the ETFs that are having their coins custodied with Coinbase, it's not a good look for them. But on a slightly different note, it feels like that Coinbase going down every time Bitcoin starts pumping, to me, feels like the rate limiter on number go up. And this is where I look at this and think it reeks of was it Robinhood, or what was the app where everyone was aping in and then they stopped the sell button on AMC, and they didn't let people get in or out of the
Robinhood.
trades
Yeah.
that they wanted
Yeah.
to. Robinhood. And it kind of feels like that, but in the crypto space, because Coinbase is arguably the largest exchange. It's definitely the largest exchange in the US. It's got the most volume. All of a sudden, if you're not able to buy and sell, then you're a captive audience there. The custody is a separate issue in itself, but for number go up technology, they're having the largest exchange just turn off for hours in a bull run is absolutely unacceptable. And you think they'd solve that, but it feels like it's a built-in issue, and it's a feature for them, not a bug. It's a way to rate limit, how fast the number's going up. From a custody perspective, this is a stark reminder that you don't want to be, leaving your coins on exchange, or alternatively, you don't really want to be having your Bitcoins in an ETF. And this is where, if anyone's really serious about, number go up and wants to see the price really rip, there's going to be no alternative, or the best thing that all of us can do collectively is to get our coins off exchange and get our coins away from having an ETF solution, someone else holding our Bitcoin, because like the saying goes, not your keys, not your coins. If you don't have your keys, then you don't have your coins. You've got a paper claim to what that underlying asset is, and there have been countless examples of these paper claims not being substantiated in the physical Bitcoin. So in time, people will learn, and I think ETFs represent an easy access to this. It brings in a totally different market for Bitcoin. It brings in broader adoption and acceptance across the board from an asset investment perspective. It brings in, I think, a much older demographic that all of a sudden Bitcoin's been legitimized in their eyes because Uncle Larry said it's good to go. So now we can invest in it. And the hope is that it brings a whole pool of capital that never had access to Bitcoin previously into the ecosystem. And now, once they're in the ecosystem, we can work on moving them down deeper into that rabbit hole of self-custody and responsibility.
Absolutely. 100% agree there. And Bitcoin, it's being legitimized slowly but surely, seeing that now Wall Street is addicted to this feedback loop of they buy a little bit, the number goes up, they buy a little bit, the number goes up. there's real pent up interest for this. But on the other side of that, that means a lot of people are going to be wanting to learn about Bitcoin. And when they learn about Bitcoin, chances are they're not going to want to buy these ETFs. They're going to want to self custody it, just like you said. So obviously your expertise is in this, explaining self custody to people and the utility of it, and then helping them reach that. So talk to us about multisig and self custody and who this is for, because a lot of people, when they love Bitcoin from the price exposure perspective, maybe they even love it from the sovereignty perspective, but as soon as you start talking to them about keys and 3 of 1 multisig, their interest shuts off, their brain shuts off. So break down multisig and talk a little bit about who it's for.
It's a very good question, and this is it brings up multiple, I guess, times in my life where we've talked about multisig to clients or self-custody, and you can just start to see the glaze of disinterest wave over, the vision. It's just a complete loss of focus and distraction, and move on to another topic. So to me, multisig represents the opportunity to onboard newbies, onboard people with a lack of technical skills, and provide a huge amount of support in their Bitcoin journey into self-custody. It also offers the opportunity to provide redundancies into a person's self-custody arrangement, where if you're self-custodying in a single sig with a single sig device, you've got your Bitcoin on seed words, you've got your seed words on a device or written down on a piece of paper. You need to make sure that that piece of paper or the seed words are protected. You don't know if your words have been compromised or your key has been compromised until potentially your wallet has been drained. And this is where I think multisig gives you a much better opportunity to protect your Bitcoin in a way that provides redundancies that no other format of self-custody can.
Phenomenal. Extremely well said. So there are different platforms for this. Obviously, one of the most popular being Unchained. I want to ask you about credit markets, because this is something you've talked about. I work with Nick Bhatia, of course, apart from Theya, and one of his main theses is that Bitcoin will grow and grow and grow and become a more prominent piece of collateral within our global monetary framework. Obviously, Unchained is one product that does that. And I've heard you call Bitcoin the most undervalued collateral in the world right now. Explain to us what you mean by that, because I think that's a piece of Bitcoin that a lot of people may be ignoring. Bitcoin's utility as this base layer asset that can kind of underpin the world's debt market. So talk to us a little bit about what you mean by Bitcoin being an undervalued collateral.
It's a very good question, and this is where a broader understanding of finance and credit is really critical, and understanding what type of security allows for good collateral. And this is where all lending, all credit in the market is based on collateral, i.e. what is the underlying security you're taking hold of to give credit. And this is where most credit markets, most people in credit, most of the finance world is sleeping on Bitcoin, because they don't really understand what this thing is. They think it's a magic internet money or a little toy or a trinket, and they're yet to understand the power that Bitcoin holds by way of a form of collateral. And this is where so many things come up on this that I think need to be discussed. Particularly when it comes to the rage of talking about ETF and just buy the ETF, you hold the underlying. Sure, you hold the underlying, but you don't actually hold the underlying. That's the problem. You hold a claim on that, and it's an ETF. Now, once the credit markets get built out and the infrastructure gets built out around having Bitcoin as pristine collateral in the space, i.e. the best form of collateral to underpin any credit moving forward, your paper claim in an ETF is going to be subordinate to the underlying owning the actual Bitcoin itself. And this is where, if you look at the scale of fees on lending, or the interest rates associated to different types of borrowing, you'll see that the best forms of collateral get the lowest interest rates. And this is where, if you hold the underlying Bitcoin, if you want to borrow on your Bitcoin, are going to have the lowest interest rate possible. And it's my thesis that in years to come, you are going to get paid to borrow on your Bitcoin, which sounds counterintuitive, and it feels like it breaks all forms of physics in finance. But there's method to that madness, and this is where, with an ETF, you're going to pay a higher interest rate on borrowing on that ETF as opposed to borrowing on Bitcoin and the underlying. And that's for a number of different reasons. With an ETF, it's only open 40 hours a week, whereas Bitcoin's open 168 hours a week. Underlying credit markets will be able to operate, 24/7, 365, whereas, the existing credit markets only operate 24 hours, 40 hours in an entire week. So less than 25% of an actual week is made up of trading time in markets. And this is where, holding the underlying asset, you are going to be rewarded as a borrower by having the cheapest interest rates available and the best, most preferential lending arrangements offered to you if you actually offer up Bitcoin as collateral as opposed to an ETF on Bitcoin.
Right. And then the other component too, and maybe you can expand on this, is I think the quality of credit, because in this day and age, we have a central entity that kind of guides the direction of interest rates. And not only that, but banks, there doesn't need to be collateral anymore in order for them to extend loans and issue new credit. And so I guess my question is, like, how do you view the quality of credit in a world where Bitcoin is one of the most common forms of collateral? And then what do you think that does to not just their financial system, but also the quality of life?
Well, I think it's going to be a forcing function. The quality of credit is being degraded day by day. And I think what you're alluding to in that question is the fact that there's now the ability to print credit or create credit with 0% reserves. Is that what you're referring to? Yeah. So previously, the GFC brought in a number of accords. You're probably familiar with Basel III accords, which were developed to create capital requirements of the banks if they were creating and rehypothecating customer savings in Australia, and for all the is it GCIS banks or GSIC, globally systemic important banks,
GCIB,
whatever it is,
or GSIB.
Thanks.
Excuse me.
Thank you. So all of those banks subscribed to Basel III, where they were required to have certain capital requirements for any new lending, and that typically looked like, on a home loan, if you lent $1 million, you had to have 5% of that $1 million by way of capital on your balance sheet, and that could be the form of customer deposits. So you could leverage up your customer deposits 20 times to get a lending ratio. Now that, and I think it's really only an American-centric thing where they've removed those capital requirements, although that gives the implicit approval for the rest of the world to follow that lead. But now there's no requirement to have any form of collateral on the balance sheet for the banks to issue new credit. So what that means is there's a severe deterioration in the credit, because now the banks have got no skin in the game. And in the US, the banks have systematically removed their own skin in the game by creating mortgage-backed securities, collateralized lending and the rest of it, because they'd package it up and then they'd get it off their balance sheets. And what it is it's a way to bring forward all of the benefit and all of the profit that they would make on that entire loan over the 30 years, bring it forward into a single saleable event, a one-off, and then sell that to a market as a collateralized lending obligation, or collateralized debt obligation, a CDO. The quality of credit has since deteriorated further, because you now have even less assets backing these loans and these debt obligations. And this is where I think Bitcoin is going to serve as a forcing function for banks to get that type of lending in check or in order, because we now have a pristine collateral which is going to totally redefine what lending looks like. So when we look at lending in the traditional sense from a household perspective, there are a number of things that you look at. You look at the capacity of the lender, i.e. how much they earn and whether or not they can afford to repay the loan. You look at the character of the lender. Are they willing to pay back that loan and meet their obligations that they've got? And then you look at the collateral of the loan, and you think, is this the type of collateral that we want as a bank to take if we're going to give them money? And typically, globally, the number one form of collateral that the banks use is a residential mortgage, like a title deed over a residential property. And this is where, when you look at Bitcoin is going to totally redefine lending on every level, because you no longer require 2 of the 3 C's of responsible lending. You don't care about their character You don't care about their capacity because all you care about is the quality of the collateral that you're getting. And because this collateral is liquid 24/7, 365, you can liquidate them whenever you want with no interference. And this is where, from a banking perspective, Bitcoin is the pristine collateral because there's no counterparty risk to that. All of a sudden, it's a complete security lend, and you know what the exact value of that lending, that collateral you're holding is at any point, any second of the day. And if the margin gets too thin between what you've lent out and what the collateral is worth, you can sell them instantly. And as the price of Bitcoin rises, the market cap gets bigger and the liquidity gets much bigger. You're going to find bigger and bigger players enter the market to use this as collateral for bigger and bigger things. And the end state of that is to back government issued bonds.
Wow, extremely well said. And it is paradigm shifting, and it's something that the viewers and the listeners of this show should think about and mull over. The fact that lending, the quality of borrowing is deteriorating. The name of the game in the United States is spend, 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 because in order to remain desirable on the global stage, the United States has to have a higher GDP, large portion of which is spending. And so more and more that's being funded by huge fiscal deficits and much lower quality credit being extended at the commercial level. What you've just explained is that Bitcoin flips that on its head entirely. In order for borrowing to occur, somebody knowing that they're going to have to put up their Bitcoin, the most valuable asset that they hold, and that Bitcoin, what you're doing, what you're investing in, if it becomes less desirable to the lender, they can liquidate you at any moment. And so basically, immediately as this becomes more common, you automatically have a world with much more productive borrowing instead of what you're seeing now, which is borrowing in order to spend for spending's sake, and more things turning to having to be financed. You could finance a Domino's pizza. You could finance basically everything. The app Afterpay was one of the biggest apps on the App Store last year. It's quite insane. One thing you talked about previously is your Bitcoin valuation framework. I'd like to ask you about that because I think it has something to do with Bitcoin's role as collateral, where you view it and how you view it could get to a certain price. So talk to us about kind of where we are on the road to having Bitcoin as a more widespread form of collateral, and ultimately what your valuation framework for Bitcoin is. Where do you think we can take this?
Two very good questions, and they seem outlandish, but understanding how credit markets work, and when you have a functioning credit market with Bitcoin as collateral, really anything is possible. And to lay the groundwork or the premise that this is built upon is, we're in a stage now where the people entering Bitcoin and the amounts of capital coming to Bitcoin are getting exponentially larger. Bitcoin started out as a trinket that had no value whatsoever. Then some, cypherpunks created some form of value to it. And then we've seen adoption from, hobbyists to enthusiasts to mad keen Bitcoiners, but it's really been on a personal level. We haven't had any major institutional adoption with this until now. And now we've got ETFs have arrived. So this opens up a whole new portal of capital. Soon we'll have sovereign wealth funds owning the underlying asset, and then the real final boss is going to be not a sovereign wealth fund, but a federal bank a national bank like the Federal Reserve, or alternatively Reserve Bank of Australia, or the Japanese bank, you name it, whatever the national bank is, having this on their balance sheet as a foreign reserve, and then ultimately printing money to do and buy more Bitcoin like Michael Saylor's doing. So understanding that is directionally correct, and that is what's going to happen. We can also overlay what's happening from a supply perspective, that we're seeing more and more coins come off exchange, and those hodl waves are getting longer and deeper, meaning people are less inclined to sell their Bitcoin or move their Bitcoin once they've been holding for a long period of time. And it's really a very simple intersection of those two things, and seeing as that plays out, what we're going to see is in time, and it's my thesis, that we are going to, and this is a very basic valuation framework, and I understand the problems with it, but in a very basic essence, we have $6.3 trillion worth of global trade happening on a daily basis. And we have 900 Bitcoins minted on the day as it stands, which is 28th or 29th of February. Very shortly, in less than 6 weeks, we're going to have daily minted Bitcoin of 450. So that 900 number is going to halve. My contention is that once people figure out what Bitcoin is and we have a functioning credit market on the Bitcoin network, people aren't going to be using their Bitcoin to sell it. They're going to be using functioning credit markets as a way to never sell their Bitcoin and get credit for purchases and do things that they want to do. And working in the family office space for a number of years, that's one of the key things that most families try and do is they hold on to their best assets. They don't sell them. They finance them if they have to, have liquidity requirements. And the same thing will come to Bitcoin. And so when you think about this, when people understand the power and the value of Bitcoin, the fact that it's the best collateral ever invented, we're going to see, and my contention is, we're going to see Bitcoin value, in the billions of dollars, where Bitcoin is, the very rough calculation for that is $6.3 trillion worth of global trade divided by whatever's minted on the day from a Bitcoin perspective. And so at the moment, that represents a $7 billion valuation per Bitcoin. And post-halving, that number would double to $14 billion.
Absolutely remarkable. And what you say makes sense, right? And it's intuitive for the people listening, because when a homeowner needs more money than they're bringing in, they don't sell their house, they take out a home equity line of credit, right? In the same way, functioning credit market on top of Bitcoin would mean that rather than people selling this highly liquid asset that's used across all of global trade in order for to meet the needs of all these borrowers, you wouldn't sell it, you would just borrow against it. And so that makes perfect sense to me. In your mind, where do you, obviously you talk to people constantly about this, and you really have an ear to the ground in terms of people's perception of Bitcoin as an asset. Where are we at in closing that informational arbitrage? Because you said at the beginning of your question that once people find out what Bitcoin is, and this is something I've been harping on for ages, Bitcoin trades like the NASDAQ, but really it is pristine collateral. It's the only absolute scarce asset we have in the known universe. So where are people at with understanding what Bitcoin is? How close do you think we are to that informational arbitrage of what people think Bitcoin is to what Bitcoin actually is? Close.
Miles from it. We are so far from it, I can't tell you. And this is where a very humbling thing for me is I'd like to think that I know a lot about Bitcoin and I'm an expert in the space. And every day I'm continually humbled, and there is so much to learn. There are so many rabbit holes that you can go down. And I think I've spent the last 8 years staring into this, into this particular area when it comes to an asset, an investable asset, the best asset. What are the functions of that, collateral, the rest of it. But I still know so little about the rest of the network and the benefits of it. And this is where there are so many key points of interest, because Bitcoin is so extensible across so many different facets. People will come to it for different reasons. I come at it because it's, I'm an asset investment advisor, and, look at, why is this different to every other asset? And why do we want to own it? But people will come at it from other reasons. And this is where, I look at, the understanding of Bitcoin. I think there would be less than 0.1% of the population who actually understand what Bitcoin is in a relatively deep sense. We've got so few people who are dollar cost averaging, who are using it as a savings account, who are using Bitcoin as a day-to-day medium of exchange. And I think as the understanding and acceptance broadens, we're going to see more and more of that. And this is where we are so early. I don't even think we're at 0.1% of the population. So there is massive, massive room to grow, like 1,000x from here easily.
Beautiful. Massive room to grow, 1,000x from here easily. You've discussed how Bitcoin will become one of the most widely used pieces of collateral. I share that thinking. We still have a long way to go for the world to realize and understand that. Wall Street is just now getting around to it. So what can the people listening to this do? Say they have a great deal of cash on hand, they're looking to buy Bitcoin, or they already own Bitcoin on some kind of platform. What can they do to make sure that they're insulating themselves from whatever happens and they own their Bitcoin outright? What can they do today to make sure that they're holding their own keys?
The number one thing is to get your Bitcoins off exchange. And if you're holding an ETF and like it, I would urge you to get the underlying asset as well. I understand that there's a certain market that's going to just buy Bitcoin ETFs and that's it, but there's going to be a realization at one point in time in the future why that's a mistake. And I urge people to buy the underlying as well. So, I look at multisig as a way for people to get their Bitcoin off exchange in the safest, easiest way possible. And I am, and this is a plug for Theya, I am yet to find an easier solution to multisig than Theya. I think it is a mind-blowing solution. Spent a lot of time with Smeet and the team in the last year, giving feedback and updates on what they're building out, and I think it's really exciting purely from a speed perspective. Like if you need your Bitcoins off exchange in a matter of minutes, Theya is able to deliver that. And you can do that in a collaborative way, which is even more important, I think, because it's incumbent upon all of the Bitcoiners in the space to help people get their coins off exchange. It's a hugely daunting experience, setting up a little Trezor device or a cold card, whatever it might be, and then writing down 24 words and then seeing a long string of numbers and letters and punching that into the computer on Coinbase and saying send something here. It really is very daunting, and this is where a multi-sig arrangement with a collaborative custody, I think, is really important, because you've got an expert Bitcoiner in your back pocket to help make this transaction and this process really easy. And most importantly, to make sure that you don't muck it up. And this is where, for everyone who's a Bitcoiner now, it's really about not mucking it up. You've done the hard work, you've learned everything you need to, you've got your money into the best asset possible. The most important thing you can do now is ensure that you preserve that moving forward and make sure you don't give anyone an opportunity to rob you of that. And that's where self-custody is so important.
Extremely well said. I too would recommend Theya. Obviously, I'm on the team, but what we have done here with Theya is truly, it's groundbreaking, and it's one of the reasons I joined up, because multi-sig seems extremely daunting. At the start of this call, you can attest to the fact that most people turn off immediately when you talk about keys and multi-sig. They don't want to learn about it. With Theya, not only are we democratizing it because you have somebody to guide you all the way along, but it's that much more simplified because it's in your pocket and you can do it so quickly. So I'd encourage people watching this who haven't yet to go download Theya on the App Store. It's free for now. It won't be forever. So download it, check it out, get your coins off exchanges, see how you like it. And Peter, I appreciate the glowing review. Any final words before we sign off here?
Probably just to reiterate what you just said. If we're all interested in number go up, and I haven't met a Bitcoiner who isn't. And if they aren't, I just call bullshit on that. Everyone's interested in number go up, and the most important thing that you can do to help that is to get your coins off exchange. And I've got to say, Theya has created a great product that is very easy to use. It's intuitive, it's easy, and it's really quick. So I'd urge everyone to try that as part of their journey of getting coins off exchange. And this is where I think, if you're serious about Bitcoin and wanting that number to go up, the only thing and the most important thing you can do to make that happen is get your coins into self-custody. However you do that, do that. And this is the most important thing that we can all do. If anyone needs help on that, I'm here. I dare say, Joe, you offer that as well. So it's really important that we as a community, Bitcoiners, have helped those who aren't in a position, whether it's technical or a lack of knowledge, to do that. We support the community to bring that about, because ironically it helps all of us by getting everyone self-custody.
That's exactly right. We were 6102 in the past, Executive Order 6102, asset forfeiture. You can bet your bottom dollar that Wall Street is not going to say no to the feds if they come knocking asking for the Bitcoin. They're going to give it up right away. Self-custody is more important than ever. If you want to learn more about what you can do, go to thebitcoinadvisor.com. That's advisor spelled with an E, not an O, and check out Peter's Twitter at Peter BTC Advisor. Peter, once again, thank you so much for coming on the show.
Absolute pleasure talking to you, Joe. Appreciate your time.